Picture Wall Street in the early 1980s. Suits, cigars, and a young trader named Michael Milken who had a wild idea. What if the riskiest companies in America could still raise huge piles of cash just by paying investors a little extra for the risk? Everyone called these bond junks because that's what banks thought they were. Worthless paper from companies too shaky to trust. Markin did not care what they were called, he built an empire on them. Within a few years, those junk bonds turned into something nobody expected, a weapon. Suddenly, small players could raise billions overnight and go after companies 10 times their size. This was the birth of the hostile takeover. Corporate raiders would borrow enormous sums, buy a majority stake in a company, and take it over completely, then sell off the pieces to pay back the debt. Few names became infamous and also famous for turning boardrooms into battlefields. For a while, it felt unstoppable. Fortunes were made overnight, and the whole country watched companies after company get swallowed whole. But debt used as a weapon eventually turns on the person holding it. By the late 1980s, the bubble started cracking, Markin was indicted, and his firm collapsed. And the junk bond market crashed hard, taking a chunk of the economy down with it. It's a story that still echoes today every time you hear about leveraged buyouts or corporate raiders on the news. The junk bond era taught Wall Street a lesson that never really goes away. Debt can build empires, but it can just as easily burn them down. So if you love this video, please do like, share, subscribe. Until next.